While I didn't trade New York AM for today being, I believe, a Thursday. Fuck, it's a Wednesday. Never mind. Yeah, my time distortion is crazy. It's a Wednesday. There were beautiful, beautiful trades. Now I'm gonna mark this out on NASDAQ, but it is the same idea on ES. Notice that we tap off from these rejection blocks, right? And so price is gonna want to sweep that at some point, which we end up doing in London. And actually, this is a trade I took. I did take that trade. Now, what happened at New York? We opened up the 8 a.m. 8:15, and we left behind this humongous gap. So if I were to just draw that out correctly, this 15-minute bearish gap. I'm drawing a lot of rectangles and stuff in my charts, but just like, don't mind it. I'm going to 5-minute. We left this 15-minute. Oops. And so we're going to want to fill the gap. There we go. We filled the gap. But this is pre-market. What happens during market open? We want to fill the 8 a.m. 8:15. And we don't know that. We just react to price doing that. We see that. And we get the entry from here, catching the, kind of pre-firing the inverse, all the way down to TP1 plus break even, which corresponds with this liquidity. But we don't get the bottom liquidity yet, because the rule goes, you want to get the most probabilistic liquidity first, and then later get the lower liquidity, because we're going to get that pullback first. You can see. So how do we get this entry? Let's hop into the 1 minute back in time at the entry area. We want to see this type of thing. We don't enter on the first inverse. We want to see a market structure shift, because this is not a clean delivery. It's not really that one wick that I'd like to see with the letter V, but we have a wick on top of here. So that's not really clean. So instead, we need a delivery off the rejection. You know, I should have went in a higher time frame. I'm going to show it in a higher time frame first. No, let's go to 5-minute. Make it more clear. Here we go. We need to get... Oh shit, that's not it. Where's the entry? Here we go. We need to get this entry off this rejection. So that's our rejection block. And in this case, we come and wick it all the way up. But as soon as you see it come below here, that's our delivery. So you have to line it with the 1 minute. And our 1 minute shows what? You could have entered here, and even if you did and you put your stops above the highs, you could have still won the trade, but you would have suffered like 90% drawdown. But we don't take that entry. We take the market structure shift. We need this swing low. Let me just do that. This swing low to be rated for a market structure shift. We need to see that happen. And then we take our entry on a candle closure with our stops above that one candle that displays lower. And that's our entry. Beautifully done. We see this reaction right here because that's a demand zone. Pretty much, well, you can say this candle right here, this bearish candle. And you target TP1. That's a beautiful 1 to 3.7. Then what happens? Then we get this inversion on the 1 minute. Where are we delivering from? We're delivering from this equal low, these relative equal lows right here. Actually, the triple relative equal lows, assuming that's not taken. That's very powerful. We definitely want to TP here before we take anything further lower. And we know that we deliver from something, because if I were to remove the scan box, notice that beautiful, beautiful wick on the bottom and nothing else. That's a textbook V shape. So as soon as we get the inversion, which is not here yet, but over here, so if I were to draw this out, yep, it snaps to here. This is a 1 minute bearish fair value gap. As soon as we get that inversion, notice right here, this is our inversion. You can take your entry, but I'd like to see a cleaner pullback, because this inversion is not as powerful. You can see that the wick is kind of very strong on top, And we need to see something cleaner. So I like to see a market structure shift as well when it's not as clean. So this, yeah, there's a swing high. This swing high. Oh, goodness. Let me angle it down and call it market structure shift. We don't, oh shit. Yeah. Oh my God, what am I clicking on? Okay. We don't get that market structure shift until the candle that, where is it? That closes above it. So this market structure shift doesn't happen on this candle because that's a wick. We have to wait until this candle. That's our market structure shift. And this is already a raid because we took out liquidity technically. And then we wait for the return. The return, so I marked out this equilibrium right here. We tap the 0.618 or the 0.5. You can take any of them. And as soon as this candle closes bearish, because we've already done a market structure shift to bullish, and there's a lot of liquidity on the top to take from the 8 a.m. 8:15, take the entry, and the rejection of your entry is below this candle that inversed it, slightly below. I usually take it to, so the inversion candle is here, but like the actual full move is about here. So I like to kind of consider that the whole inversion process, because it kind of includes this on a lower time frame, even like on a lower time frame than a 1 minute, because based on my understanding of inversions and V-shapes. So that's like a 33-point stop on NASDAQ, which is about 0.13%, and a take profit into the 8 a.m. 8:15. Now the only thing is we do have to take profit right here. This is one of the areas that we can expect, that we can expect price to potentially reverse, because this is a very clear bullish candle in amidst a bunch of bearish candles. That is our supply zone. Notice what happens when we hit the supply zone. Price comes in and starts wavering. So we want to take profit and break even over here. TP1 plus break even is right there. And even into the supply zone, that brings us a clean 1 to 1.9. So basically a 1 to 2. Once you've scaled out probably 75% of your position at the 1 to 2, you'll leave a runner. So 25% of your position, leave a runner that goes all the way up into, you can do the former rejection block, that was a thing, or even the 8 a.m. 8:15, that all gets hit. Just leave a runner, it doesn't matter, or you can trail, because it's already going to be higher than here. And if you were to trail it, you see, I would trail it like below this, then trail it below this, then trail it below this, then, because like I want to trail it, no, actually not, trail it below this, then trail it below this. You always want to trail it below the swing lows, then trail it below this, and you might get tapped out by that. But at this point, like if you're already seeing this type of thing, I would honestly just exit myself manually once we get that for a better exit. So that's that trade. These longs are kind of fun. Now, here's the third trade. This is a beautiful 1 to 6.5. Beautiful 1 to 6. So what happens right here? We get, let me go to the 5 minute, or is it the 3 minute? I think the 3 minute is clearer. So, oh shoot. It's noon time. And notice that this trade ends at 11:15 and starts at 11:03. So this is still before noon. What happens here? If I just delete this scan box I drew out, that is a raid and a swing high we put in right here, which is beautiful V-shape. A V-shape that I like to see is such that the middle candle of the swing low or swing high has the most far extreme wick. In this case, this one does indeed have a wick that's further out and like up than this one that's before it. And what do we raid? We raid this swing high. You see, 1, 2, 3. This wick is on the top, and we raid it because now it's like, oh, are we coming down? No, people who are entering here get swept out. There's a raid. Then what do we like to see? A market structure shift. So this right here, shit, that's not a swing low. I must be tweaking. Or you can do a CISD. This, oh, goodness. You can do it by the CISD. Regardless, the structure kind of shows itself. There. What did I even mark out for this? Change in the state of delivery. Yeah, there we go. There's our change in the state of delivery. No matter what you like to use market structure, this is not really a clean market structure shift because it's not a swing low. So this is really just a break of structure. I should correct myself. Or a change of character. I'm just going to call it that. So you'll notice that we get some sort of confirmation that price is now headed lower. And on a 5-minute, we get a clear picture that while we're putting in a high, we come down and we're disrespecting equilibrium with this order flow. So where's equilibrium? If we're respecting bullish order flow, we have to not only make it through this main area of, what's it called? We have to not only make it through this rejection block, this 8 a.m., 8:15, we also have to respect bullish order flow. But here's the equilibrium I just drew out. And where is price going? It's closing at the 618. Sure, that's fine. And then the next candlestick is closing down here. But even this candle closing so bearish, it's disrespecting the equilibrium. And there's no point to order at the 618 right here when price is not in a confident bullish order flow. So right here, you're able to take your entry already. I like to go into 3-minute because 3-minute has cleaner structure. And, oops. Let me just go back to where it was. And you'll notice that right here, I drew that equilibrium and get rid of it. This equilibrium right here, from this bearish candlestick up to that, like, because this is bullish and then this is bullish, we get a beautiful tap into the 0.5, and you have two options. You can either snipe the limit entry based on this, because this is already very clear bearish order flow. Just look at this candlestick and look at that candlestick. That tells you, like, these two 3-minute candlesticks is enough to tell you it's bearish order flow as a result of taking a raid right here of this candlestick, right? So you can snipe the entry with a limit order right here and put your stops above this protected high because this is already high resistance liquidity. And if you really aren't confident, you can still take your entry based on the closure of this bullish candle and take your entry here. And you still get a 1 to 3. And of course, the original snipe is a 1 to 6. This is why precision entries matter so great. If you get that precision entry, you're able to break even and you're still better off than the 1 to 3. Because if you did the 1 to 3, then your stop loss could have been even lowered to the candle, to this candle, to like about here. But regardless, this is so beautiful execution because remember, the original idea was for us not just to take out this liquidity, but also this liquidity right here, TP shorts. You see, TP shorts is within that bullish gap and relative equal lows right here. So that's just beautiful liquidity objective that we need to take out and fully filling this 15-minute bullish. Now this gap corresponds to that oil dump equities pump, and we had relative equal lows, and price just shoots down. Look at this 3-minute candle, 2, 3, 4, 5 times 3 is 15 minutes, 177 points. This is probably the most beautiful trade that I've seen so far. I wasn't there to take it, unfortunately. I was sleeping. I traded London session. I was working, but I would have loved to have taken this. And then after that, our objectives are taken. Both longs and shorts are done. So market just chops around. And if you want to take the MEC model to fill this equilibrium, you can. You can do a MEC model entry here if you're like really good with it. Whoever trades like the MEC model. I don't even know if you could get that because this last 1-minute candle is a little bit too big. Like look at how many points this is. Let me just measure. 63 points, which is 0.25, 0.26% for a singular 1 minute. That's a little bit too crazy. So I wouldn't even know if that's a trade people who take the mega model can do. But anyway, those are the 3 trades for the day, which catches about, let me see here. So we start off with a short. Wait, what the heck? So we catch, oh shit. Uh-oh. Where am I clicking? $121 points, followed by 126 points, followed by 177. So let's do it. 121 plus 126 plus 177. 500. Oh shit, 424 points on NASDAQ. Which is, I mean, if you take a look at this, 424 points. So let me just measure that out. 424 points is 1.7% on NASDAQ, while your average risk is about like 0.1%, or in this case 0.13%, or in this case 0.138%, not more than 0.15%. So 0.15, or rather 1. Shit, what's the history? I think it was 1.7 based on measurement. 1.7 divided by 0.15. You're basically getting 11R on the day just from these 3 trades, and that's just absolutely beautiful. So imagine you were risking 0.5%, well then you're done for the day at like 5% up on the account just by trading my model. That is so beautiful of a New York AM session. And naturally price just starts funneling. Like, people who are naive, they go like, oh my god, price action after this is just ass and just like funneling around. Well, yeah, because New York AM has taken the objectives for TP1 plus break even and TP shorts, and while we didn't fully catch TP longs, we do take out opening range right here, wicket, and then opening range, opening range, opening range, right? Beautiful. And the idea for this long, because this long is more complicated, because it's not really a clear liquidity area, is just for 2 things. Number 1, we have a supply zone on a 1 minute here. Number 2, we have this rejection block right here that we can take it as like price is going to want to fill that area, like a fair value gap. And that's enough. That's really enough. I personally would have taken my exit at this updated rejection block. So I would have marked that out. I would have called that the next unmitigated rejection block. And what does price do? Price grabs that rejection block, and we're done the entry right there. So that's what I would have done in real time. Because I always like to exit at the most probabilistic area in which price can begin to go against us. And this would have been a very tough hold if we exit from here. But the middle of the rejection block is always a sweet spot. Or I would have aligned it with a high volume node, so I might not have exit at the middle. And I might have known to exit about like slightly before the middle if there is a low volume node that starts accumulating as we go to the middle, or high volume node about here. I would have took my exit slightly below the middle. That's how it's done. But yeah, that's it. Let's clear up the chart. So I'm going to go object tree. I'm going to go click here, delete, remove, and there we go. It's like nothing was there. And now you look at the chart, it's like, oh, how do you even know how to trade this, right? No way you can trade this, right? Absolutely not true. This beautiful, beautiful ORB, beautiful, beautiful V shape to the upside, filling that rejection block, beautiful market structure shift down to get the rest of the liquidity right here. This liquidity objective, which lies in this 15-minute and 5-minute bullish gap. Very, very clean day.